to start off, why do this? And when I say this, I mean, why write the book? Why do the interviews? Why subject yourself once again to what you know is certainly going to be a look at your tenure that is not going to be without significant criticism, when frankly, a lot of that had passed and you were living your life, I would assume enjoying a lot of it. Why re-enter the fray?
Yeah, David, I think I've had a chance to kind of sit back and think and reflect. To your point, I'm doing new and different things now, but I'm wholly unhappy about the narrative that has been created around the GE team. I don't think it's been complete. I don't think it's been fair. And I think it's hurt a lot of people. And I felt like a more complete story should be told. And I think in addition to that, David, kind of today, all leadership is crisis leadership. And I think to a certain extent, this team and me, went through a lot together that others can learn from. And I wanted to share that as well. And I would say those are really the 2 or 3 reasons that were going on inside my thought process.
Well, so when you would read things or hear some of us discuss your tenure, would it frustrate you to the point where you wanted to raise your hand or scream at the television or scream at the newspaper? Is that kind of what you're trying to accomplish here?
Well, look, I think there were points in time when I kept expecting somebody to, speak more completely about the company, whether it was in the leadership team or the board. And I think, David, the fact that some of the stories around Power or our great finance team, it's just hurt a lot of people. And so, over the course of time, in the absence of nobody just kind of raising their hand and saying, that's not the way it really happened, I actually think it adds to the story. And I think it helps all the people that work together for so long, help them have a broader context. It's a team that did a lot of things right, and we weren't perfect. But I wanted some of that to get out there as well.
Yeah. Well, let's get into it and talk a bit about, the 16 plus years that you ran the company. And obviously, as people probably know, although some perhaps don't, I was one of your employees for quite a few of those years as well. Let's start off with capital, Jeff, because in many ways, when I look at your tenure, when I read the book and obviously know the company as well as I did, it sort of defines so many of the decisions in terms of how you try to create value along the way during your period. Capital was obviously 40% of the earnings when you took over as CEO. It rose to as much as 50% in 2007. A lot of people, you included, say that it was perhaps the tail wagging the dog. You inherited it, but you couldn't quite part with it, could you? Because it was such an important component of earnings. If you had to do it over again, how would you approach capital?
Yeah, David, I talk about it in the book. The G Capital, many of the businesses were great. The team was really strong. But I think, as we kind of crossed over into 2000 and beyond, we had really underinvested in our industrial businesses. We needed the cash from GE Capital to help us make those investments over the early 2000s. That's what we did. We basically tried to kind of remix the portfolio while at the same time keeping earnings growing. And we made the decision to grow GE Capital. By the time the global financial crisis hit, that didn't look very smart. Right. And so one of the things I talk about when I reflect back over the 16 years is we had a window after 9/11 where I think it was kind of the end of the power bubble. We had a chance to maybe reset the company, really lower earnings and kind of really remix more aggressively in the early 2000s. We chose not to do that. I decided not to do that. And I look back and say things might have been different had we picked a different path. So by the time we got in the global financial crisis, David, it was just, repositioning the company. And I would say more broadly, it just creates boundary conditions when we're in financial services, particularly, after the financial crisis that limited some of the strategic flexibility we had.
You know, when you talk about that period after 9/11 and giving you an opportunity, which was obviously very early in your tenure, to sort of wipe the slate clean, what were the pressures that you felt? Why did you feel like I can't do this? Was it simply concern about the performance of the stock price?
Oh, look, I mean, I think the discussions we had at the time really were, it's a strong company, it's a strong foundation. There's lots of volatility in the world. Let's continue to grow the company because we had faith that we could get there over time. And by 2007, it looked like we were right. The stock was at $42. We had invested in some really good industrial businesses that were growing. So again, it wasn't that it was done carelessly or foolishly. We did it with lots of discussion with our board and investors. But you know, nonetheless, I think the decision I made was that it was more stable for the company to proceed on the path that we'd been on than it would have been to do something more radical at that time, right? And that was a decision I made. And again, I talk about it and look back and say I would have done it differently. The other thing, David, I would add is that, you know, Honeywell to a certain extent would have fixed some of this and put us on a different industrial capital position. We decided not to do that. I was engaged in that decision as well, and that had an impact at the same time.
Yeah, and I want to move on to a lot of those decisions, but staying with GE Capital, I mean, it was so complex. It was a black box to a certain extent. Did you ever feel that you fully understood? And we know in retrospect you didn't, but did you feel at the time that you fully could grasp the complexities of what was really going on and the risk that was being taken on at GE Capital?
Look, I think, David, I talk in the book about, you know, how we assessed risk and how we took different considerations. It was complex for sure. We worked very hard to get our arms around it and make good decisions around it. But again, I think, you know, going into the financial crisis, our kind of risk trigger for GE Capital was to maintain the AAA, and we spent a lot of time thinking about that and acting on it. I think once the financial crisis hit, you know, what was very clear to us was that wasn't a risk trigger at all, that basically everybody's credibility was you know, put backwards, including the rating agencies, and we were in a much different place. So our aggregate size was too much to go through something like the financial crisis. And again, you know, it wasn't that we weren't trying and that we didn't feel like we had our hands around it. It was just the risk, the tail risk was bigger than we had thought.
Yeah, well, it ended up being a lot bigger than a lot of people thought. But, you know, in reading other books, as you might imagine, about GE, some said, listen, you know, even though you were a math major at Dartmouth, they questioned whether you fully understood basic concepts of finance and whether you really had a grip on it. Did you?
Oh, gosh, I think, you know, I certainly spent the time, and I certainly really felt like we had a good team. I think, David, if you think about things like Genworth, you know, which I brought to the fore in 2003, 2004, that was clearly something that was driven by me. It was something that I had inherited. And, you know, that I think was the right decision at that time. So working together, I felt like we had a good handle on all the businesses around GE Capital.
Well, one thing nobody potentially had a good handle on, Jeff, was the long-term care. Now, you mentioned the Genworth spin. They were not included there, the long-term care policies. I'm sure you wish they had been. I know in the book you write you wish you had done it and just taken whatever was coming your way then. $21 billion later, I mean, a $6 billion charge, another 15 only a couple of years ago. You say you were relying on GE's system of internal checks and balances. You say KPMG, you were paying them $110 million a year. And in actuality, no one had looked closely at the policy details for years, and no one knew what assumptions were used.
I don't think that's quite true, David. You know, in other words, we were a systemic institution for 6 years, from 2010 through 2016. I think the board and I felt like we had never spent as much time and effort on reserves as we had during that process. We had a 500-page capital plan that was done in 2016. So I really felt like the team and the checks and balances we had in place were sufficient, as did the board. Again, internal audit staff, strong audit committee, KPMG, Fed regulated SIFI. It was 6 or 7 layers of review that went into all the reserves around GE Capital. So again, going back to Genworth, it was a tough deal. I think all of us were really focused on just getting it out into the public markets. And we made the decision to keep long-term care, which we looked at hard over the subsequent 15 years. So again, I think we felt like we were certainly doing the right job for the company, but it didn't work out that way for sure.
No. Well, again, you do say no one knew or could have known how toxic the investments would become. You believe that to be the case?
Yeah, look, it was reviewed annually. It was reviewed continuously for 16 years. And again, I think the internal routines were quite strong. And really, I trust today. I think we had a great group of finance people looking at it. So I was very comfortable with the processes we had inside the company.
Was there any fraud there, Jeff?
Zero that I could see, David. Look, there's a difference between being wrong and being wrong on purpose. This company spent an incredible amount of time and effort to get things right. Again, bottoms up controllership, audit staff, significant review by KPMG, regulated by the Fed, by other strong regulators, a very strong audit committee led by a bank CEO and the former commissioner of the SEC, right? Check and balance, relief, ways for people to voice opinions and concerns over and over and over again. So, David, really, there's just, and some of this that has, where people haven't pushed back, I think has hurt the company. So we spent time, money, and effort to get it right.
Yeah. Well, you do seem to indicate that you believe you were just in many ways unlucky. Is this another example of being unlucky, or at some point, do you make your own luck or lack of it?
Oh, gosh. I think, David, if you read the book, I'm harder on myself than I am on anybody else. And I made my own decisions, and I'll take the consequences for that and let it stand where it might. But I am very tough on myself as I write this book. Do I think volatility and market risk and things like that matter in terms of somebody's tenure? Sure, it does. But I am tougher on myself than anybody else. For anybody that reads the book, you're going to see that.
Well, I read every page, and you are. But you also deliver blame in other areas. You certainly, Steve Bowles, who ran Power, you don't spare any niceties for him, or I should say there aren't many for him. You're quoted as, you wrote, "Maybe the worst mistake I ever made was listening to the board and not firing him." So it's not as though, Jeff, you just fully take the blame. You're saying there were a lot of other things going on that and people who failed you, aren't you?
Dave, again, I'd start by saying I'm tougher on myself than I am on anybody else. But the Power and Alstom story has been written and rewritten and observed by you and by others for 4 years. And I felt like there was a need to have a complete telling of how we did the Alstom deal, what has been a really good business in Power for a long time, and then issues we had with execution. So as I say in the book, if I had it to do over again, I wouldn't do the Alstom deal, but it was a complicated deal with difficult markets where we didn't have a team aligned with execution. And I, again, own that, as does the board, in terms of where we were positioned at that time. So all I try to do, David, is tell a complete story so people could have a complete answer.
Well, let's talk a bit about deal making. It's something you and I have discussed. I think we may have in one of our last interviews is when you were CEO. You've been criticized for essentially buying high and selling low. And I did note in the book, Jeff, you mentioned Alstom. You said it was just too much. When in doubt, don't, in terms of perhaps you shouldn't have done that deal. On the sale of NBC Universal, you said Comcast got the better of the deal. You do try to revise our view of Amersham, pointing out how much value was created from that deal, because many of us in the press at least looked at the price you paid and criticized you at the time. We've talked a bit about GE Capital. There were so many other deals as well that flew under the radar. It doesn't appear that you were a particularly good deal maker. Is that how you would grade yourself?
Oh, I think, David, it's mixed. Again, Amersham was criticized for 15 years. It turned out to be a spectacular deal for our investors, strategically, operationally. Buying Enron's wind business when we did turned out to be a great deal for the company. Smith's Aviation. I could go down the list of other deals. On the negative side, clearly NBC was a tough time to be selling it. I think I explained in the book what our rationale went into in terms of why we did it. Getting into WMC, I own that and acknowledge that as an issue. But, Dave, we were moving through the portfolio in a very dramatic way, right? We had $100 billion of dispositions, $100 billion of acquisitions. We were trying to reposition the portfolio. And so, again, I think, were they all perfect? No. But a lot of them worked a lot better than people understand or acknowledge. And over the course of time, Dave, look, over the 15 years or 16 years I was CEO, we had record earnings, record cash flow. Our industrial business growth was strong and solid. There are things that are worth telling about this period in GE.
True. No doubt. But towards the end, in particular, the company was generating nowhere near as much in cash as many had thought it was. I mean, over time, Jeff, securing EBITDA at very high that doesn't come through, and selling EBITDA at lower multiples than you should adds up. And many would say it did add up to a company that was not generating anywhere near the cash that many thought it was. And that was towards the end of your tenure and obviously into Mr. Flannery's short tenure as well. I mean, bad deal making, particularly in size, can add up and hurt a lot.
David, the last year of Amersham, right, where it was fully inside the company, it generated between $2 and $3 billion of cash. So that is substantial.
Yeah, it is. No doubt. But also selling NBC Universal's. Now, I understand at the timing of it. And the money you were spending, there's so many things to discuss here, Jeff. Let's talk about sort of some of the other efforts that you made. And you spent a lot of time in the book about them. Moving the company to become more of a digital company with Predix, for example. Eco-Imagination. These were significant efforts that you also spend a great deal of money on, capital on, at the company. Do you feel like they were worth it?
Well, David, you and I are sitting here talking, again, we've known each other for a long time. We're sitting here talking in 2021. Are you saying that investing in clean technology is not a smart thing, really, on Eco-Imagination? The digital, kind of the digital industrial future's here. Tom Siebel, who's a friend of mine, he took C3 AI public last December with a $15 billion valuation. So I think when we talk about the initiatives we had around globalization, around Eco-Imagination, around digital investment, under the course of time, when you look back over 15 or 20 years, I think it's hard to dispute that they weren't the right places for the company to be focused and to execute on.
Well, Predix has largely been dismantled. Eco-Imagination, I mean, you write in the book as well. I think you claim it delivered as much as, I think it was $270 billion in revenues. I'm not quite sure how you get to that. I know you were going to spend as much as $10 billion from 2010 to 2015 on it. So you look at your predecessors and you say what? That they screwed up by getting rid of these efforts that you spent so much time and money on?
Are you talking about my successors? Look,
Predix. I'm talking. Let's specifically talk Predix right now. The digital effort that you mentioned, and Siebel, and putting the sensors on engines, for example, being able to provide the data and analyze the data. Many people say, Jeff, it didn't actually work. Predix, that it was
Yeah.
kind of cobbled together and it didn't work?
GE today, I think has somewhere between a $15 and $20 billion wind business. So, I think the efforts in renewable energy were well positioned today. On the digital side, Dave, I sit in Silicon Valley. I see the new companies coming through and the new developments coming through. There's not one industrial company that's not working on digital transformation, taking sensors, developing software. There's many that are trying to take data off of GE turbines and Siemens turbines and things like that. So, look, I think the initiative itself was exactly what we should have been doing. And again, did I get everything right on it? No, and I say that in the book. But was it exactly the right place to be at? In some ways, maybe too early from a standpoint of where we are. I think so.
Yeah, I mean, listen, nobody's going to argue with your views, and you were early. You say you weren't an environmentalist per se, but you certainly were focused on climate change fairly early. I know you had that run-in with Al Gore way back when about chlorofluoric or fluorocarbons when you were fixing refrigerators. But you may have been a little bit early. I mean, now would be the time, Jeff. It's not clear that you would have actually made it there because you would have spent so much money without return for so long before you might have gotten to the promised land.
I think that's, David, I think that's kind of an argument that's hard to make. In other words, when you think about some of the highly valued companies today in clean tech, it takes a while to get them to market. Same way with digital. Siebel and I started at roughly the same time. And what I say in the book is, he said to me, Jeff, you're doing exactly the right thing. You're never going to get there in your company, right? You should know that. And look, to a certain extent, he was right. But I think, look, GE Digital still exists. There's still opportunity for the company today. And we cheer for them to do it.
Do you think you were overly optimistic with the idea that you really could become a digital company?
Oh, gosh. David, I tried my best. I thought we were able to recruit some really good people. When you look at third-party groups like Gartner and the customers that trusted us, we were pretty well positioned. So I just think it's a hard transition, and it's one that every industrial company is going to have to make. And, maybe, again, I'm not saying that we got everything right, but we were first. We were admired for it. The last, we used to have a show, Dave, called Minds and Machines. In 2016, where we would invite customers and partners, we had 4,000 people, right? We had a ton of customers that were working with us. And in our case, services are important. We need to invest in them.
Yeah. So, but I mean, again, it's largely been dismantled. You spent a lot of money on Predix, for example, and I'm using that as the sort of the overriding system here for your efforts. Do you think GE then has made a mistake? Do you think Larry Culp has made a mistake in sort of not focusing as much on that part of the business?
My understanding is that Larry actually has rejuvenated it. My understanding is that Larry spends a lot of time there, and they're still working on it from a service standpoint, and so my sense is that Larry actually spends time there. Predix doesn't exist anymore, but GE Digital does, and hopefully we built a foundation that he finds useful.
Do you ever hear from Culp? Does he ever call and just sort of ask a question or two or want to chat?
I haven't talked to Larry in a while, but he and I have known each other for a long time. And look, we all cheer for him. We all want Larry to succeed.
I want to talk a bit about your management style because, of course, along with so many other things, it's been criticized. I know you, of course, as the boss or the boss's boss. You were always very enthusiastic. You were always great in working a room. You were always very respectful as well. But many say you were simply too optimistic. That just because you were able to walk through walls doesn't mean that everybody else can. You write in the book, once you push through a problem that at first seemed unfixable, the obstacles that come afterward don't seem quite as hard. And you didn't seem to want to hear that people could get something done if they were to tell you that. Were you too optimistic? Did you only want to hear good news, Jeff?
David, for almost 8 years, I would bring a GE officer to my home over the weekend. We would have dinner together on Friday night. We'd spend 5 or 6 hours together on Saturday morning. And the whole goal of these meetings on weekends without the phone ringing was for them to tell me something I don't know, to go through their perspectives on the company, on their business, for me to get to know them better. And in that period of time, we had the leader of the water business who explained to me that we weren't winning and that we should sell the business, and I did. We had the general manager of the engine business who said, look, we have so many engines to make, so many LEAP engines to make. We need different incentives for the company, et cetera, et cetera. You know, David, so I heard bad news almost all the time. We sought it out. We tried to get the right people in the right room to make a decision. I never had small meetings. I always had meetings with 20 and 30 people so people could speak their mind and see how decisions got made. So, look, I had a desire to win. Am I an optimist? Sure, I'm an optimist. But by the same time, I led the company through some very serious difficulties and did so with a team that I trusted, and we got through to the other side.
Well, you know, again, some former employees are quoted as saying it was better to figure out a better way to deliver the bad news, of make it go away somehow, than to deliver it to him straight. You're saying that's simply untrue?
Look, David Joyce, who runs the aviation business, he explained to me that the GNX engine needed to be completely redone. $500 million it cost, did it calmly and was accepted immediately. Keith Sharon came to me the day Washington Mutual went bankrupt and said, look, we got to do an equity raise over the weekend. You know, David, there's just too many examples that provide the counterpoint to just make that assessment hold. And again, you ask why I write the book. These narratives hurt the team, right? These narratives don't just hurt me. They hurt the whole GE community. And I just think somebody has to put them right, and nobody has. And so that's one of the reasons why I wrote the book.
Yeah, I get it. And well, the big narrative, though, is the stock price. I mean, you write in the book, it's like you say, I can't figure out how you really viewed it, Jeff, actually. And even through the years when we would talk and I'd interview you, it might not have motivated you to do specific things, but it's certainly not something you were just ignoring. And of course, now that we look back on your tenure, you mentioned the stock hit 42. I remember that sort of fall of 07, right before things really got bad. And then it went to 7. I mean, you took over, obviously, in 01. It was in the high 50s. You did have a 50 multiple, granted, crazy multiple. But that's what people look at. So you say, yeah, it hurt a lot of people, but you hurt a lot of people just by having that stock price dramatically fall and having a dividend that basically went away.
Yeah, look, Larry, David, there's not a day I don't think about the company. Did all the decisions work? They didn't. But could anybody have tried harder than I did? I don't think so. I did my best every day for the company. Even if you go to 2015, we traded it as a premium to the sum of the parts. Again, that's kind of one of the data points we use to assess the company. So, look, I think what we try to do is run the company well, make good decisions for the long term, and ultimately, the stock price is a measuring stick. I don't run away from it in the book. I own it. But there's other points of context that are important for people to understand as well.
Yeah. All right. Well, coming back to power, which sort of seemed to, with long-term care and obviously the unknown liabilities that suddenly became known, this is under Flannery, really, and then the decline of power, people look back and say, well, you could have known more. We talked about long-term care, but let's talk a little bit more about power. You say that people were open with you. They did tell you when there were problems. Was Bowles not delivering to you what you needed to hear, or was it your responsibility to understand that things at Power were not what they seemed?
Oh, this was a business that delivered for a long time, and I think what we count on, what any company counts on, are teams that are accountable for the commitments that they make and that run the business with a sense of urgency. At that same time, David, I had an oil and gas business led by Lorenzo Simonelli that was delivering bad news as well. But they were taking action. So, what I try to do in the section on power and Alstom is just tell a complete story. And in the end, I'm not looking to shade things one way or the other. I'm just, so much has been written, so much has been said. I think it's important to get all the facts out there. Yeah, that's what I try to do.
Right. No, I understand that. But I mean, when it comes to power, Jeff, there are many who say, listen, you were doing discounted turbine upgrades for extending length of service contracts. But really what you were doing was bringing money in near term and sacrificing margin longer term, which resulted eventually in a lack of cash. How do you respond to those criticisms?
David, this is a business that generated $40 billion of cash over 15 years that had, a pretty strong track record. And I had watched it over a fairly long period of time. So again, I have a really strong finance team who I trust and respect. And I think, we made the decisions we made, but I really believe that, the previous track record of power had been extremely strong. And again, I tell the story completely and talk about power and Alstom. And I just think that's what's missing.
Yeah, well, you spare no criticism. And as I said, you say leaving Bowles in his job is always something you'll regret. You actually say it's one of your largest regrets. Why?
Again, I think what I try to describe is what was going on at the company at that time, and a complete telling of the story at Alstom. And we had a leadership team that, wasn't sure how committed they were in terms of the business, and the board and I knew that, and that was something we decided collectively. But in the totality of the book, David, I'm harder on myself than I am on anybody else.
I wonder, you say probably shouldn't have done Alstom, sort of is how you describe it. I'm looking for your words here. Yeah, it was just too much. When in doubt, don't. But, you also mentioned that you think maybe Welsh should have followed through and taken the conditions that might have been imposed to get the Honeywell deal done. I mean, they weren't dissimilar in the sense you were dealing with these European regulators who were asking a lot of you, kept asking for more. Do you think your feeling that Welsh perhaps should have pushed through on Honeywell informed your feelings on pushing through on Alstom?
Maybe a little bit, but I think it would be unfair to kind of connect the two. I would say, look, I think Dave Cote did a great job at Honeywell over that time period. It was a good company, and he did a great job. I think with Alstom, look, I really believed as we were going through it that it was added to our service business, which was important. This was in the era of the Clean Power Plan, and I felt like Alstom could help build our service capability. It gave us offshore wind, which we thought was a great capability to add. And I think it built our global footprint. And, all of us basically assumed that the US and Europe weren't going to be the big markets for gas turbines going forward. It was going to be Indonesia and Thailand and India and markets like that, where Alstom had a bigger footprint. So, that's really what was driving the decision. But it was, it was a complicated deal. It was the end of my tenure. The leadership team was going through change and in disarray, and really, we should have maybe found a way just to exit at that time. But that had nothing really, Honeywell really had nothing to do with it.
It didn't. Yeah, I drew the connection having read your thoughts because I wasn't aware of them in terms of Honeywell and Welsh, and I just wondered, which is why, of course, I asked the question. Yeah. Jeff, your board of directors. Again, many people want to focus on you. You were the face of the company for 16 years. They want to say you are to blame. And as you say, you certainly don't spare criticism for some of the decisions you made. But to what extent do you think your board deserves criticism for what happened at GE? Did you fail your board, or did your board fail you?
Oh gosh, David, I think, I did the job for a long time. I think there were moments in time where the board was fantastic. I think during the financial crisis, Sandy Warner and Ralph Larson and Roger Pinsky and Shelley Lazarus, we couldn't have made it through the financial crisis without them. I think at the end, I had just given them too much to work on. We had a tough deal. We had a succession process. We just had a series of things underway inside the company. And it was just a lot for the board and for me to manage. So again, I'm harder on myself than I am on anybody else. It would be unfair for me to blame the board. I think we disagreed in an important way on the leadership of the power business. But if I'd really thrown everything down on the table, I probably could have rolled through that. It was just a hard time. We were in the middle of succession, and I didn't want to be an Imperial CEO. I wanted the board to be engaged in the leadership discussions, and so I left those doors open.
Yeah. It's funny, though, in coming through in our conversation here, I mean, this is obviously was an incredibly complex company. You got GE Capital, and I'm talking now through your entirety, not towards the end. Mm-hmm. GE Capital, which we've discussed as, a black box in certain ways, unclear exactly how in parts they were making their money or what they were getting into or not, and how much risk they were taking. And then all these other companies. Was GE, and does it continue to be, simply too complex, Jeff, for one person to really run and for a board to really effectively have oversight of?
David, I think it's a very fair question. I'll leave today's GE to Larry to describe, but I would say when you have tailwind, you can manage a broad, complicated company. When you're going through things like 9/11 and the financial crisis and the kind of volatility we've lived in for the last 20 years, I think it's challenging, right? It was really hard to navigate GE Capital through the financial crisis and invest in the industrial business and get NBC prepared for a new administration, et cetera, right? So I think there's an argument that can be made for simpler is better. And that's, again, we were hard at work at making the company simpler. I don't think we ever made it simple enough. And again, that's a particular challenge when things are really volatile.
Yeah. I mean, the Welsh years, obviously, in which the stock price went up enormously and he was lauded as the greatest CEO of the 20th century, as you point out, not the easiest time, not the easiest point at which to take over. But I do wonder, what is the core competency of GE? I mean, we all believe somehow it was this ability to have shared practices across these disparate businesses. Is that really the case? Was that the case? Was a lot of it just, yeah, these were good people, but really there was no point in having these businesses together?
Look, I think if you look back in time, and again, pre-2000, generally good economic growth, I think the notion of having a conglomerate that had strong management practices, good financial strength, I think that held together. I think in this era, David, the conglomerates need to have technology, need to have dominant technology. That's what Alphabet has. That's what Amazon has. That's what we have, basically in aviation and power and healthcare. So I just think the world shifted. Again, everybody's going to read the book to see criticism of Jack and things like that. But Jack was a great CEO. I learned so much from him. I loved working for him. But the times are just so different today versus where they were 20 or 25 years ago. And that's the challenge for every company.
Yeah. Although you do say in the book, when he went on CNBC and said, I think, when you missed earnings that you should be shot, you wrote, Jack chose not to be a true friend. So you were truly hurt at that point.
Oh, gosh, I was devastated. I was on the bottom myself, right? And I was devastated by that. But again, we're in the middle of the financial crisis. You didn't have a chance to kind of suck your thumb. And really, David, later when it came time to cut the dividend, Jack was the first guy I called. So after that time, a couple times a year when I had a tough issue or wanted somebody to talk to, I would talk to Jack. He was an amazing CEO. Again, I didn't write the book to change that in any concept. What I really want to do is tell a full story about the company and allow the G leaders of this generation to understand that there were some good things as well as the bad.
Yeah. Well, it's funny, Jeff, and as you said during the course of this interview, and those who read the book will see as well, you certainly don't spare criticism for yourself, but you do seem to also want us to sort of at least see your side and perhaps not take pity in you, but understand sort of what you were going through. And I want to read one of your last things you wrote in the book. This was towards the very end when you were leaving GE. You write, all the times I'd sat there with a grin on my face, gamely answering the one question I was asked more than any other. What's it like to follow Jack Welch? I guess I had hoped all that would come back to me in some moment of grace. I'd spent 35 years busting my ass for GE, and in the end, none of that seemed to matter. You want people to feel sorry for you?
Oh gosh, no, David. Again, you picked a paragraph that's in the middle of a lot of discussions about the company and how I felt. What I tried to do in the book was talk about what happened, why I made the decisions I made, what happened, and how I felt. Right. So I try to do those three things. I think that's at a moment in time that's very human, right? And sometimes in business, and there's going to be some leaders out there that things aren't going to work the way they want them to. And you feel a little bit sorry for yourself. But, Dave, I kept going. I went on and I decided to write this book. I reached out to 75 colleagues who wanted to give input on the book. I've had 30 of my colleagues read the book in its entirety because we all share in this together. So, look, David, right. I did my best. I did my best. It didn't all work.
Nobody questions that. Nobody questions that, Jeff. I really don't believe that's a question that people have.
Yeah. No, I got it.
But at the same time, listen, you know this. I mean, at 30 Rock, I would run into longtime employees when the stock was in free fall there, sort of in that period, right after you'd left, actually, sort of the 17, 18 period. And they'd ask me what to do. And I would look at them and I'd feel horrible. What do you tell those longtime employees who owned that stock, who believed it was their nest egg, who relied on the dividend, and who obviously now, with the stock even at 11 and up from 7, still basically have nothing that they can count on in terms of their retirement?
I think about the company every day. I say in the book, I know some feel like I've let them down. Every day I will think about that. And again, I just want people to know that we didn't get it all right, but the team always tried our best to build a great company. And that's all I can say. I understand, and it weighs on me, and I think about it. But I also want to say that there wasn't one thing I could think of to try harder for the company and for the people.
You did buy back a lot of stock, $108 billion on buybacks from 2004 to 2017. Was that money well spent?
Again, the times we did it, we thought about it in great specificity. We talked about it as a board. We viewed it against other alternatives for the capital, and it was done with great discipline and great process, right? So it wasn't like it was done by people in a dark room. It was done with full transparency and with the notion of how do we both invest in the company, which I never shirked from, do the acquisitions that felt like could position us, and generate the right returns for investors. And that's what we did. We invested in aircraft engines. We invested in healthcare. We built digital. So we made the investments to help grow the company for the long term.
Yeah, but I mean, we obviously, it's easy to look back in hindsight and say that money would have been better spent or not spent at all on buybacks and kept. And then the $2 target that you initiated for earnings, I think it was $2.18, but you initiated it years earlier. You didn't make it, you didn't hit it. But again, many said, well, you're just doing that to try to get the stock price up, not necessarily because you fully believe you can get there.
Oh gosh, I think, David, when we announced the exit of G Capital, we felt like there needed to be some pivot for investors to stay focused on. This was done several years before. It was done conservatively. It was done bottoms up. It was done, with great transparency with the board and the leadership team. So I think we did it in the context of exiting really half the company with respect to G Capital, and that's why we did what we did.
What was your best day?
Oh gosh, my best day was I think it was October 1st, 2008, when we completed the equity raise in the middle of the financial crisis. It was a very difficult decision. It was a very difficult day. And when we completed that, I really felt, with Keith and Mike Neal and everybody, like we really accomplished something in a very brutal time.
And I bet your worst day was probably right around then too. What was it?
David, I would say my worst day was maybe 5 days before, when Washington Mutual went bankrupt and our credit default swaps blew out. And it was just, it's hard to describe how frightful the financial crisis really was.
Yeah, having covered it, I remember. I mean, we never knew what was coming next. And I assume the case, and I know the case for you. I mean, you almost couldn't roll the commercial paper at the company. GE not being able to roll its commercial paper, that would have been the end, right?
Well, look, I mean, I think we were always able to do it overnight. I think it's difficult to describe to people, how challenging those times were. What a great job I think Bernanke and Tim Geithner and Hank Paulson did. But, David, I watch CNBC now. It was almost impossible to get a $700 billion TARP program through in 2008. Now that's not even a rounding error to the kinds of money that people want to see put in the economy. So it's remarkable how different a decade is.
Yeah, we benefited a lot from what was done during that period, certainly. And what we saw was able to be done so quickly in the spring of 2020. Jeff, what is the thing that you miss the most about being CEO of GE?
Oh gosh, David, I love the people. I miss them. I stay in touch with them. But it was a remarkable honor to lead GE, and I loved the people I worked with.
So that's what you miss, is just the people. And what is the thing you miss least?
Oh gosh, it's not having control over anything. I remember when I worked for Jack would say to me, don't do anything you can't control. I think by the time my CEO days were over, I think business leaders recognized they couldn't control anything. And it's nice to have a little bit more freedom.
Yeah, that's interesting you say that. I mean, give me a little more sense as to what you mean. You can't control anything. We still have this view of the CEO. We still bring on countless CEOs on our network every day to discuss sort of their vision for their company and their strategy. And yet here you say you can't control anything. What does that mean?
David, I think one of the best companies, best management teams, only because I know him, is Delta Airlines, right? I think Richard Anderson was one of the finest CEOs I've ever met. Ed Bastian is cut of the same cloth. They're doing great. They're doing everything right. And then COVID hits, and all of a sudden, it's a completely different industry. It's a completely different company. So I feel that we just live in a time of great uncertainty.
I want to go through a few people that you mentioned in the book. We've talked about Jack Welch a bit. Ken Langone, you don't spare some criticism. You say, quote, despite his deep financial expertise, he had approved all the disastrous insurance acquisitions made by my predecessor.
I think Ken is a great entrepreneur who built a great company at Home Depot, and I'm going to leave it at that.
John Flannery, I worried that he could not make a decision.
John's a good man. He did his best for the company. I supported him. And if truth be told, the most difficult person to write about in the book is John, because I left problems for him I didn't mean to, and it certainly hurt him in his ability to take over the company.
Yeah, how do you think it reflects on you as well? I mean, Welsh always talked about how important it was that his pick of successor would be his key decision. And of course, he came, and let's be honest, he came to say he regretted it to some extent, Jeff. How do you feel about Flannery and the fact that he only lasted, a little more than a year?
Look, I think it was a complicated time for John and for the company, and I'm just going to leave it at that. I supported John's selection. I wanted him to do well, and he did everything he ever did for the benefit of the company, for the support of the company, and I'm going to leave it at that, Dave.
Okay. You do say Lorenzo Simonelli would have been the best choice for CEO. Why?
I've had a chance now to see Lorenzo lead Baker Hughes for 4 years, and in a very difficult cycle, you can see him shine. And the fact is, David, that you don't know anything about somebody until the worst day. You never see them and know much about them on their best day. I've had the chance to see Lorenzo in some really bad days, and he's a spectacular executive.
Bob Wright. I was done with him. Bob Wright had done a lot for GE, but it was time for a change.
Yeah, I think that sums it up. I think Bob was spectacular at NBC. It was time to have a transition. I'm a big supporter and fan of Jeff Zucker, and I think he did a great job at CNN. And he put a lot of the things in place that NBC benefited for a long time.
Dennis Naden, who ran GE Capital, had crossed the line. He needed to go.
Dennis, there's nobody that did more for the company in the 90s than Dennis Naden, but times had changed. Again, I think one of the hardest part of telling the story for the GE community is times change, and people have to change, and situations have to change, and that's what it reflected. But in terms of financial execution, Dennis did in the 90s did more for the company than probably anybody else in GE.
And finally, Jeff, I got to ask you about this trail plane. I'm sure you don't, the story of this plane that followed your plane around seemed to coalesce a lot of the negative sentiment around your tenure. What do you say to those who say, how could you have let that happen, and why did it happen?
No doubt, David, it was a terrible practice. It was a terrible, let's say, optic at the wrong time. It was put in place by the security team, but nonetheless, it went on too long. And whether I decided it or not didn't matter. It happened when I was there, and I certainly regret it.
You do. So if you had to do it again, you would not have had that. Did you even know about it? I mean, were you aware of it?
Done by people, not by me. But look, at the end, everything works for me. And I fully understand how people feel about it. But I don't think it really spoke to my character and the work I did. But nonetheless, it was a bad practice.
And so finally, Jeff, you say, you wrote the book in part because a lot of people were hurt and you wanted to defend them. Do you hear from those people still? Are you in touch with them? So many people left the company, obviously, since you've left or even prior to that. GE is not the same company it was, although it's certainly not dissimilar. How do you think about that?
David, last week and this week, I'm doing Zoom calls, 30 and 40 at a time with GE alums from different groups. And I'm kind of going through how I wrote the book, why I wrote the book, and what's in it. And it's been fantastic. It's been reaffirming. I think, again, there's certainly people that wish I would not do it. But I'd say the vast majority are happy that I've done it, respect the process I've used to do it. And it's great to see their faces. And I talk to a lot of them on a frequent basis. But, again, this was a company where people had each other's back. They worked well together. They worked hard together. And I think people want to acknowledge that and respect that. So that's how. And we root for Larry. We cheer for Larry and want him to do well.
I guess I end where I started. I mean, I still find it somewhat, and I know others will as well, when they look at this book and they go, why would Jeff Immelt, why would he choose to do this? And open himself up to the interview that we've just had, questioning all your decisions, revisiting yet again the fact of all that value that was lost from $500 billion down to a $100 billion company today. You don't regret having written this book. You're happy with this process that you're now beginning to sell this book and all the conversations that you're going to be having around it?
You know, what I say in the book, David, is that truth equals facts plus context. Truth equals facts plus context. There's facts out there, right? The stock price, how much money is earned, stuff like that. The context has been missing. And really, I believe that context needs to be told for the company today, for the people I worked with. And it's not the first tough interview I've had with you. And I'm okay with that, right? I think this has been fair, but truth equals facts plus context. I want to get the context out there.
All right. Well, you're doing that, and I guess we may hear from you in the future. I mean, you're now that I'm getting older, you look to me to be a relatively young man, Jeff. So I would assume that you're going to do more of what you're doing, teaching, participating in venture capital.
Healthcare venture, it's a robust place. I love the people I work with. I really feel lucky that I've found something I really love to do.
Well, Jeff, it's been good to spend a little time with you again, and I certainly appreciate your willingness to take questions and have the conversation. Thank you.
Thanks, David. Good to speak with you again.
Nice to see you too. Jeff Immelt, former chairman and CEO of GE.